So, did the SEC ask Coinbase to delist all altcoins, everything besides Bitcoin? This is what's just come out in the last few hours, so let's talk about it. All right, everyone, let's get started. It's the 31st of July, end of July, and today we just got this headline from the Financial Times. It's actually quite a sinister headline. The SEC apparently asked Coinbase to stop trading all altcoins. Everything but Bitcoin was to be delisted. So I'm going to go through the article because we don't really have any other sources. I saw that this article was also featured in the Decrypt, another source, but it's actually, they're quoting this very source here, the Financial Times. So I'm going to go through the Financial Times article and we're going to discuss. So basically, this is from an interview, recent interview that Brian Armstrong, the CEO of Coinbase, gave, and he mentioned all of these things. So at this point, it's just hearsay. We don't really have any comments from the SEC. At least according to this article, the SEC has not commented on any of these allegations, so we can't confirm whether they're true. But my hunch, my personal gut feeling is that Brian Armstrong is not exaggerating and is not lying. So apparently the US Securities and Exchange Commission, the SEC, asked Coinbase to halt trading in all cryptocurrencies other than Bitcoin prior to suing the exchange, in a sign of the agency's intent to assert regulatory authority over a broader slice of the market. Coinbase chief executive Brian Armstrong told the Financial Times, so this is a direct quote from him, an interview that Financial Times conducted, that the SEC made the recommendation before launching legal action against Coinbase, which is a Nasdaq-listed company. The SEC's case identified 13 mostly lightly traded cryptocurrencies on Coinbase's platform as securities. That happened a couple of months ago already. We talked about this on this channel, asserting that by offering them to customers, the exchange fell under the regulator's remit. But the prior request for Coinbase to delist every one of the more than 200 tokens that it offers, with the exception of flagship token Bitcoin, indicates that the SEC under the chairman Gary Gensler has pushed for wider authority over the crypto industry. Brian Armstrong says they came back to us and they said, we believe every asset other than Bitcoin is a security. And then we said, well, how are you coming to that conclusion? Because that's not our interpretation of the law. And they said, we're not going to explain it to you. You need to delist every asset other than Bitcoin. So very clearly here, we can see what the SEC is trying to do. They're really trying to stop retail investors because Coinbase is one of the biggest exchanges in America. And of course, here we're talking about the US. This is not all over the world. This is actually concerning US customers. Binance US and Coinbase, these are the two biggest platforms for crypto exchange. And Binance US, not so much anymore, but Coinbase is still one of the biggest. And this revelation from the SEO of Coinbase is actually showing us how the SEC is really trying to not only take control over all crypto assets and regulate them, but beyond regulation, their goal is to prevent the US retail investor from accessing cryptocurrencies. Because my theory, of course, this is me speculating here, we don't really have any proof of that, but my theory is that the banking sector is working tightly with the SEC and Gary Gensler in particular, in order to fight back, in order to reduce the ability of the regular US citizen to access cryptocurrencies, because they saw that cryptocurrencies are a big investment too. And of course, the banking sector is losing a lot of customers because in the majority of the banking sector is not involved with crypto. They're still against crypto, even though they secretly might have, some sort of a stake in cryptocurrencies. The majority, for the large part, they are not offering crypto investment to their customers. And many customers are shying away now from other investment tools. And crypto remains a big chunk of investment. Of course, it's not as big as gold or many of the stock markets. But we saw many reports over 2020 and 2021 where a lot of of investors are turning to crypto nowadays, and even with this bear market, wise money, wiser investors are actually accumulating at this point because they're not scared. They know that the markets go in cycles and that we are currently in towards the end of a bear cycle, and of course the next cycle will be epic. It will be a major bull run that we're going to see starting from next year, maybe towards the end of this year even. And people are preparing, investors are preparing, they're accumulating, and the banking sector is not happy about that. They're working with the SEC, they're working with Gary Gensler. This is my personal speculation, but here is Gary Gensler back in 2018 doing a whole course here in crypto trading and crypto investing. There's many videos of Gary Gensler online. I'm not going to play them for copyright purposes, but there are many videos of Gary Gensler online talking about cryptocurrencies, blockchain technology, crypto trading, not talking about all cryptos are securities beyond Bitcoin. I mean, they can't do anything about Bitcoin because there is no company to really take to court over it or anything like that. Very cleverly, Satoshi Nakamoto disappeared, and with that, he really left them no choice. I mean, it's strange that up to this moment, Ethereum has not been declared a security, even though from what it seems, if they asked Coinbase to delist even Ethereum, that would mean they were trying to classify it as a security. So far, they have been unable to. They tried to do that with XRP. And so far, the court case decided that XRP is not a security. The SEC is seemingly losing that case, even though they're appealing it. So there's still time. The tables could turn, but from what it seems, it's not very likely. And also this case, the SEC versus XRP, could actually help all of the other 13 tokens that they have now formerly classed as securities. It's unofficial. They're yet to prove, this in court. And I feel that it will be very difficult for them to prove that in court. So by all means, the SEC is actually losing that case. But let's continue with this article here. If Coinbase had agreed, Financial Times claims, that could have set a precedent that would have left the vast majority of the American crypto businesses operating outside the law unless they registered with the commission. And it is still unclear whether the SEC is the one to be regulating all of these cryptocurrencies, because a lot of them are not even close to being securities, in which case the SEC will not have any authority over these tokens. They are yet to prove that they actually have authority over these tokens. We really didn't have a choice at that point, Brian Armstrong continues here. Delisting every asset other than Bitcoin, which, by the way, is not what the law says, would have essentially meant the end of crypto industry in the US. It's kind of made it an easy choice. Let's go to court and find out what the court says. This is why we actually have this court case right now, and very well that they did that. I mean, this is not the first time that Coinbase is actually fighting the authorities. Back in the day, back in 2017, the US government wanted Coinbase to easily hand all of their customers' data and everything to them, and they fought in court for that. Unfortunately, they didn't manage to win that case, to fully win that case. So Coinbase is highly regulated, and a lot of the data from users could actually be requested by government, and in that case Coinbase would have to abide, but they're not openly giving them all of that data. They have to be requested, they have to have a reason, court judgment and everything. So even though we're not really happy with how centralized Coinbase is and how regulated Coinbase is, they are not really the enemy of us, the crypto user. They're still fighting for our rights and for their business, of course. They're not necessarily fighting for our rights so much as they're fighting for their own business. They're trying to save their own skin. But in this case, it actually turns to be in our favor, right? Oversight of the crypto industry has been a gray area, with the SEC and the Commodity Futures Trading Commission jockeying the control. This is actually the other commission that is really trying to regulate crypto, the CFTC, the Commodity Futures and Trading Commission. The CFTC already sued the largest crypto exchange, Binance, back in March of this year, 3 months before the SEC launched their own legal action against the company. Gary Gensler, the chairman of SEC, has previously said that he believes most cryptocurrencies, with the exception of Bitcoin, are securities. However, the recommendation to Coinbase signals that the SEC has adopted this interpretation in its attempts to regulate the industry. Ether, the second largest cryptocurrency, which is fundamental to many industry projects, was absent from the regulator's case against the exchange. It also did not feature in the list of 12 crypto asset securities specified in the SEC's law case against Binance. The SEC said its enforcement division did not make formal requests for companies to delist crypto assets. Now, this here directly contradicts what Brian Armstrong just told the Financial Times. So, which one is it? In the course of an investigation, the staff may share its own view as to what conduct may raise questions for the Commission under the securities law, it added. Stocks, bonds and other traditional financial instruments fall under the SEC's remit, but US authorities remain locked in debate as to whether all or any crypto tokens should fall under its purview. Oversight by the SEC would bring far more stringent compliance standards. Crypto exchanges typically also provide custody services and borrow and lend to customers, a mix of practices that is not possible for the SEC-regulated companies. There are a bunch of American companies who have built business models on the assumption that these crypto tokens aren't securities, said Charlie Cooper, former CFTC chief of staff. If they're told otherwise, many of them will have to stop operations immediately. It's very difficult to see how there could be any public offerings or retail trading of tokens without some sort of intervention from Congress, said Peter Fox, partner at law firm Schoolidge, Peters, Russotti and Fox. The SEC declined to comment on the implications for the rest of the industry or a statement involving Coinbase delisting every token other than Bitcoin. And this is how the article ends. So at this point, we don't actually have a confirmation nor a denial by the SEC that this actually took place. But as I said in the beginning, I do believe Brian Armstrong because so far, this guy has been very upfront, very honest, and quite on top of things when it comes to running his business, his platform. Coinbase was actually the first, I think, at least one of the first, if not the first, cryptocurrency exchange that was allowing people to buy Bitcoin directly with a bank account or a credit card. I bought my first Bitcoin from Coinbase with my credit card because this was the only way that I could actually trust the transaction, because I knew that if something goes wrong, I could actually turn to my credit card provider and dispute that transaction. Prior to that, I was willing to buy Bitcoin for 2 or 3 years prior to that, because I think I bought it in 2015 and I already wanted to buy Bitcoin in 2013 or maybe even before. There was a Financial Times article about Bitcoin, which was talking about how it jumped in price, quite a lot, from $100 up to 200 or 300 at the time, something like that. And I was really keen on actually investing in it and, trying to get on the train early on. And at the time, we had to actually go to forums, find people, speak to people directly and try to buy it from someone. And I just couldn't trust the process. It seemed to me like I could easily be cheated or, just scammed or something, because there was no platform to actually protect you as a customer. So you had to just, it was all peer-to-peer and you had to just trust someone. You could use escrow at the time, which would be, the way to go about it. But I was not really familiar with how escrow transactions work and everything, and it just seemed too complicated. So I couldn't really buy Bitcoin when it was $100 and $200. I had to wait for another few years, and in the end, I bought my first Bitcoin at $400. And just a few days later, it was $450, and I bought more, and then it was $500, and it kept going up and up and up, because I actually jumped towards the end of 2015 when it was towards the end of a bear cycle, and I managed to catch it just before it started a proper bull run, when it actually started jumping, and by the end of 2016 it was $1,000. So it was quite a decent profit from 400 to 1,000. Imagine what happened in 2017 when it actually went to 10,000 and 15,000 and $20,000. It was absolutely crazy. I didn't cash out. I actually had to keep it all the way until the last bull run in 2021, when I started cashing out more significantly. And I still haven't cashed out some of that early Bitcoin that I bought, or that early Ethereum that I bought at $8. I still keep some of these, many of these. The majority of my Bitcoin and Ethereum is still staying in long-term storage in my cold wallets. Anyways, I digress. What I was talking about is the fact that the SEC is really trying to stop the US investor, the retail investor, from being able to invest in cryptocurrencies. They're trying to not only regulate cryptocurrencies, they're really trying to reduce the access of US customers to cryptocurrencies. This is the ultimate goal. They're really trying to launch their CBDC at some point. I'm not sure how far ahead they are with the CBDC, but they are developing a digital dollar. Even though they are talking about how they don't really need a CBDC because the dollar is already digital. However, sooner or later, mark my words, they will come up with the CBDC, with their digital dollar, and they're really trying to reduce people's ability to buy or trade cryptocurrencies, because they want to have a much easier ecosystem for that CBDC to thrive and not be challenged by cryptocurrencies, which it is. It's already challenged by cryptocurrencies. People who are in the know would never touch the CBDC unless they're forced to, of course, and most likely we will be forced into using the CBDC, just like other countries like China and India, who have launched their own CBDCs. They're forcing their population to use these CBDCs. More or less the same will happen around the world with other countries, because CBDCs, digital versions of the fiat money, of the currencies that these governments have issued, they will be far easier to trace and track and monitor and even control, meaning they're programmable money. They could actually program this money in a way that they can force you to spend certain amount of your capital on certain goods or activities or services, and they can reduce your ability to spend your own money on other services or goods that they deem negative, or they deem unnecessary, or they deem dangerous, right? So they will sell you a narrative that will go all about, security, anti-money laundering, anti-terrorists, anti-trafficking, anti-everything. This will be the narrative that they will be pushing to you. This is also the narrative that they're pushing to you to put you off crypto, right? It's always about terrorism and theft and all kinds of money laundering. It's always the bad stuff that they're pushing, rather than all of the benefits of blockchain. So if there's one thing that I can take out from this article, is thanks to Coinbase, we are actually having this court case right now, and we are not dealing with the whole of the US being in a stronghold by the SEC trying to regulate all of the cryptocurrencies, all of the altcoins out there besides Bitcoin, because they can't really do anything about Bitcoin at this point. Did you know that using Brave browser not only blocks all ads, cookies and other unnecessary clutter, makes your web surfing faster and safer, pays you in cryptocurrency, but also it offers an integrated VPN service, a Web3 in-browser wallet, and I particularly like that I can customize my news feed, and in the most easy and quick way. I just click here and I select the news sources manually. Thus, I eliminated all of the noise from all mainstream outlets, and I selected only financial and crypto-centric outlets, so I can focus on these news that directly affect my investments and that help me handle my portfolio better. If you're not using Brave browser yet, you're missing out on the best web experience. Take a look, my invite link is in the description below. Alright, well, this wraps up today's episode of CryptoCorner, everyone. I wanted to very quickly bring you this article because it just was released a few hours ago. It is hot news right now. It is quite an alarming news as well. And thankfully, the SEC didn't get it their way this time around. But the fight has not finished. We are still fighting. We are still waiting to see what will happen with the Binance case and the Coinbase case as well. And those other 12 tokens, amongst which are Matic, Cardano, Solana. On top of my head, I can't remember all of them, but quite a few tokens they actually mentioned in their case, and they're trying to prove that these are securities. Let's see what will happen. I personally feel that they are going to fail with this case, but it will be a lengthy case. It will probably drag on over the next year as well. I doubt if this case will be resolved by the end of this year. Most likely, we're going to keep talking about it next year as well. This is everything from me for this episode. Thanks for staying until the end of the video. If you like this video, show me the thumbs up. Leave a comment below if you have any questions or any suggestions for tokens or for any other topics that you want me to discuss in the follow-up episodes. Let me know in the comments below. Also, make sure that you check out the links that I dropped in the description, where I drop the links to all of the crypto services that I'm personally using and that I recommend to you. And while you're here, just pick another one of my videos and I'm gonna see you there.